Hey guys, welcome to the channel. Trader Mo here. We are going to be looking at a chart today, just kind of doing a basic breakdown of it, looking at the key indicators and just looking for things that I'm going to be saying as we get going with this together. So we're kind of speaking the same language because trading can be a different language. So go ahead and click like on this video, subscribe, spread it to your friends. Let's get this thing going and help as many people make money as possible. So first thing we're going to do here is look at the price, obviously, and the difference between the bid and the ask. So the bid is what somebody is willing to pay for the stock, and the ask is what the market maker or the specialist is asking for the stock. Now, the difference between the two is obviously the difference between the bid and the ask. So this becomes important when there's some kind of market manipulation, and you'll often see this between 9:30 in the morning and 10 o'clock, 10:05, 10:10, something like that, where the aftermarket or early morning trades are kind of settling down. You can see it when earnings come out. You can see it when big announcements come out. So typically you want to see that difference between the bid and the ask be about 1 cent, 2 cents at the most. If you see anything more than that, especially 15, 20 cents like that, you know that there's some kind of manipulation and your stock price can definitely change directions on you quickly. So we're going to want to pay attention to that, keep a close eye on that. Before you place any trade, look at your bid and your ask and make sure there's not any manipulation going on. Let's go over here. So this chart, it's a little bit more detailed. We have a lot moving averages, support lines, and whatnot. So let's get into it. So first thing I'm going to talk about are the moving averages. I have 4 of them. These are my 4 major moving averages. Moving averages can play a big role in being support, being resistance to the movement of the stock price. So on my chart, these are the colors. It could be anything. You can really make it anything you want. White is going to be 200-day. Turquoise is 100. Yellow is 50, and the 25-day is purple. Now, what is the daily or the moving average? 25-day moving average, for example. It is the average stock price of the past 25 days. So this thing is going to move around every single day, but you're going to want to pay a close attention to these, especially the 200-day, and more importantly, the 100-day. The 100-day moving average is something that big hedge funds use to determine whether they're going to start pumping a ton of money into the stock, if they're going to start shorting a stock, what they're going to do with that stock. The 100-day moving average is an important number. So next thing, we're going to come down here and look at our volume. This is each candle, each bar represents a volume for that day. If it's red, there was more selling than buying that day. Green, more buying than selling. And this yellow line that kind of rolls across is the average volume. So in the past year, 18 months, 24 months, we have had pretty low volume. And you'll even see here in the past 3 months on Sprouts Farmers Market, there are not a lot of days where we are hitting that average yellow line. So it's just something we have to deal with. It's going to be fine when markets become not as overpriced as they are. I think we'll start seeing a lot more consistent volume coming into the market, but volume is something we're going to be needing to pay a lot of attention to. The 2 biggest things that I look for when I'm making a trade are 1, volume, 2, trend, and we're going to get into trend right now. And that comes over here on your long-term chart. This down here is called your stochastic. This is probably one of the last times you're going to hear me call it a stochastic. I'm always going to call it a trend line because that's really what stochastics are. They are trend lines, especially when you're looking at a weekly chart. So let's kind of break down this little stochastic thing down here. I'll make it a little bit bigger so everybody can see it. So you have 2 red lines running through. You have this right here is at 32%, and this one up here is at 80%. Now, what do these mean? As far as algorithms and everything go, it doesn't really matter. What we need to know is that when you're at your 32% line, that means, and your red line is breaking up through the 32% line on top of the yellow. We'll get into these lines and stuff in other videos, but right now I just want to explain what is in the stochastic itself. When you get over 32%, that means that there is consensus and momentum going to the upside. So when we break through that, that gives us a good confident buy signal. Now, when we get up to the 80%, that means that we're getting into the quote unquote overbought range, where the stock price is becoming overvalued for what it is. There could be at that point a lot of sellers, a lot of stockholders starting to sell their stock, or maybe taking a reverse position and going short on it. So when we do get up into that 80% range, that's when we need to start thinking about taking our profits. So looking at Apple. Also between this 32% and 80%, this is what I call the sweet spot. This is where you're going to make most of your money. And when we get a trade that's coming off the bottom like this, I want to be inside of the sweet spot. And you can see how, if you look where this red line crossed over the other red line on top of the yellow, and look where the candlesticks are, they just started to turn green. And look, as this thing moved up, the price just kept moving up, up, up. Then we went sideways, and you can see the run that Apple had. So in between this area, it's the least risk to make a trade, and it's your highest probability of making money. So we always are going to want to trade inside the sweet spot, and we're definitely going to get into that a little bit more. So those are just a couple of things that I wanted to show you on the chart. We'll be able to, you can use literally any charts you want to. These are ones that I'm most comfortable with. But Street Smart Edge, Thinkorswim, however you want to set it up. I think Webull has its own thing. Any chart you can get your hands on and kind of customize your own way, it's going to work for you. We just need to all use the same indicators, all use the same buy and sell signals, and we'll go from there and make some money. So again, like this video, subscribe to it. If you have questions, comment below, and I'll answer all your questions. And yeah, next video, we'll do something different. I'll teach a little bit more, and we'll get rolling and start buying some stocks soon. Take care, guys.